Okay, guys, so today I want to review um, what's going on for the for this upcoming week. Um, so let's begin for the Euro USD. First of all, I would like to share what I find on the news that I read this morning. I read that the first of all, the stocks are going to be bull. So basically, what that's mean is that we are close to the end of the bull market, um, as we try to do what's the opposite thing from what news suggests. So I find some articles from the Wall Street Journal and that are trying to persuade investors to buy and try to print an optimistic sentiment on the market. So it, it's basically that. So I would like to see stocks going down for this um, weekend, is for this week, for this upcoming week, and the same about the dollar. They are giving another time better reinforcement to the dollar. I find a lot of dollar bear articles and also comments on other articles paid by the CME. I find a lot of them on the CNBC. So I would like to see that. Also, I would like to share with you the COT data for the Euro USD. So basically, what we see is that commercial positions increase a lot this past week, and sorry, non-commercials increase a lot, and commercials decrease. And you can also see that same behavior, but in the dollar index, where here the commercial positions uh, decrease on the dollar index, and the non-commercial increase. So it's basically the same, but as an asymmetric market. So we're actually facing an inversion fair value gap from the weekly chart and an auto block. Anyways, what I find out about the auto blocks is that this run here, it's a run that was product of manual manipulation. Um, that run, if you don't remember, was like a very low resistance liquidity run, where literally Euro USD increased like 6% in a couple of weeks. It was pretty insane, and I see that just as a liquidity take and manual manipulation. So what I would like to see is the Euro answering to this order block here. Also, I would have to say that this inversion fair value gap also could be seen as a rebalanced price range, as is the overlap of a CB and a BC fair value gaps. So here we have two fair value gaps. So this shaded area up here and this auto block right here. This is uh, another PD array that I created. It's similar to the breaker, to ICT's breaker. It goes lower low, higher high, and there's a bullish breaker. But what I do is that I see run on liquidity, and I just ignore the random liquidity and just pay attention on the order block previous to that random liquidity. So that's this order block here. I just ignore this part of the graph, this one. So I'm just going to ignore that one and take into account that order block. From that order block, uh, I would like to see price to be treated to the body of the candle, and also that could make confluence with this inversion fair value gap. Also, if you notice, the consequent encroachment of that candle wick make confluence with this rebalance price range, that is the overlap between those two fair value gaps. So I also like that um, price level. Going down into the daily chart, here we had a liquidity exactly on this candle here that we already take. Anyways, I would like to see that liquidity been taken with the body of a daily candle. So what we have here, if you go back to this old data of August 31st of August, um, what you could see is clean price run to the downside uh, with no token liquidity on the New York Open and on the Tokyo session. So there are liquidity that is remaining to be purged from the Tokyo session, the London session, and the New York session up here. It was taken, but I would like, as I say, to see the price to go a little bit higher in order for that liquidity pool to be completely purged. So what I expect from this week is price to go to break this high. Also, we can see that we answered to this daily order block. We respect that with the bodies, and also we closed just way too near to the wick of this candle. Um, actually, uh, 27th of November. Okay, I think market opens, so it opens inside. It traded inside that wick range from that daily candle. As you remember, wicks are treated as gaps, as inefficiencies. So when I see the price being just too near, the close of the price being just too near to an inefficiency, I expect at least to the consequent encroachment of that inefficiency to be treated. Anyways, as we want to see that liquidity being purged with more range, um, I consider that we could break this high over here and trade into that weekly order block. Also, I paused the video to show you some other levels that I would like to take an eye on for swing trade. Mm, so basically, these are the fractals from a monthly order block that I would like to take an eye on those fractals, and also take an eye on the fractals that make confluence with volume nodes that have high volume nodes. So this is a high volume node that make confluence with this fractal, and this one also make confluence with this fractal. So I would like also to take a look on this one and this one. Let me show you. This is the fractal, this is the order block. This one, this body, that green candle. And I would like to see energetic price movement. I think that this bull run it's not gonna uh, length too much, because the date of the Fed interest rate decision, I'll tell you in a second which day it was. Okay, so it was the November 8th, the 8th of November. So sorry guys, it was not since the Fed interest rate decision. It was since the non-farm payroll decision that we didn't took out the liquidity produced by the new reaction. Usually, when the new release come out, you know that the candle is just way too big. Anyways, there are some lucky traders that could take the correct direction of that candle, and in this moment has profitable trades. The market maker, not to match the algorithm, but the market maker would like be yeah would like to reprice to that specific level below the reaction of that new release that wasn't purged. So in this case, it wasn't purged. First of all, the speech, the Powell speech from the uh, after the Fed interest rate decision and the NFP event. So if we can see that the NFP event was the 3rd of November, November the 3rd. So here is where price should go, below here on some near future. So for this weekend, for this week, upcoming week, for a swing trade scenario and general review, I would like to see this level to be broken to the upside, and take a look to these three specific price levels. So the 97.11, 98.90, and the 0142. So those three, in order to take a long position for a swing trade. So as ICT would say, good luck and be safe.